The following is a presentation of TFNN. Good morning, Market Kickoff, with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. 9 a.m. Eastern Time, Thursday morning. We got about 25 minutes to go until the opening bell. We got S&Ps minus 2 points right now, trading 41.63. All the markets in the red, but barely. I say that actually. The Russell catching a little bit of a bid back in the positive. Look at that acceleration the Russell had yesterday, right? From 21.70 back basically just above the lows we had on Tuesday. And just like that, how about adding 70 points to the Russell from the lows we had on Tuesday and Wednesday? We're trading at 22.39. We're now above where we were, call it Tuesday evening. The next stop on the Russell, probably the beginning of the trading week. You're talking about 22, the high on Monday morning, literally the opening bell, 22.55 about on the Russell 2000, about 15 points away from that price level. We have commodities. Bitcoin, down a little bit, but trading at about 55,000 this morning. Whether it's a commodity, whether it's a currency, it's a store of value in some capacity. It's just very volatile right now. Crude catching a little bit of a bid from the lows we had at 4 in the morning. Crude's up more than $1 from the lows at 61.63. We got gold sliding a bit to the negative side, down about $10 at 17.83. Silver's off 20 cents at 26.37. We have notes and bonds, a little bit of lower price and higher yield. Right now, you're talking about a yield of 1.57% on the 10-year. You have an ECB conference. Not sure if it's still going on. Lagarde was out there. ECB keeps rates at 0. Not too surprising there. Press conference seemed to be everything that to be expected. And let's just jump over real quick. I'm going to jump over to the Forex and jump over to that Euro US dollar real quick and see the action. So the Euro ticking higher a little bit on the volatility this morning. There you see the acceleration from 8.30, but not too huge of a reaction. 120.45 up to about 120.61 right now. All right, what else we got going on? Jumping around to the stories of the morning, we'll jump to weekly jobless claims. Strong number, 547,000 last week. That's the type of trend we want to see in terms of declining numbers for initial jobless claims. 547,000. Market was looking for about 603,000, I believe, was the number that they were anticipating. Bloomberg survey had it maybe at 610. So just above 600,000 was the estimate coming into that number. When you look at the states that declined the most, as in encouraging numbers, right? Declining numbers for jobless claims. Texas and New York among the states with the largest declines. And then you had Florida and Georgia also seeing sizable decreases. This at a time where we're still seeing pretty substantial caseloads. Hopefully that's encouraging data when we go forward and really get a hold of COVID as people continue, hopefully, to get the vaccine. Now, jump into a CNBC article. Same thing, 547, 603,000 was the Dow Jones estimate. Pandemic era low. We haven't been at 547,000 since basically prior to COVID. Continuing claims fell by 34,000 to 3.67 million. This number, though, you're going to hear this number talked about. It's a distorted number when you think about the number of emergency programs that have been passed by the federal government, where people go from a state unemployment roll, they exhaust their continuing claims, they then go off continuing claims and go into some type of pandemic emergency program. There are still 17.4 million Americans receiving benefits under the various programs in place. That data 2 weeks behind the headline claims data. A big number, though. That speaks to why basically interest rates are sitting at 0% here. They're sitting at 0% over in the ECB, where they're having a press conference this morning. Okay, so with that in mind, we got the weekly jobless claims number. Let's jump around to some of the stocks this morning in terms of where we're moving. Amazon shares up a little bit this morning, 33.70 from about 33.62. We'll check some of the FANG stocks. Quite the volatility yesterday. We got Microsoft barely, we'll call it flat this morning. No real huge reaction. Be interesting to see where this market opens in terms of the volatility we've had this week, right? Tuesday, you accelerate from 41.70 down to 41.10, and just like that, we get it all back. You ended last week at about 41.83 in the S&Ps. You put this thing on a daily chart. We've been bumping up against this upper boundary line a little bit in the S&P, but man, it just keeps going higher, folks. The high was 41.83 that we had on Friday. We're only going to be about 20 points away from that price point on the open this morning at 41.64. Okay, what else we have happening in the markets? Let's jump around to some of them. Where are we going to go to? We'll go to stocks, and one of them, we'll go to the airlines. All right, American Airlines. They lost $4.32 a share for the first quarter, but the stock is up because America said cash flow turned positive by the end of the quarter, excluding debt payments. They're seeing advances in leisure travel. There's American. Now you're going to open at about 21.71, all things considered, right? Still off the highs of 26.09. Maybe the market got a little bit ahead of itself, but there's the action on their earnings, higher to 21.72. We'll check out some of the other airlines on that news. Delta, they're going to open higher as well this morning. Now you get to the Southwest sector. Southwest really accelerating higher. Their numbers out. Southwest up to 63.60 from about 62.04. We looked domestically. JetBlue up as well. We were at 18.77 yesterday. We're going to open above 20 right now for JetBlue shares. All right, we got a lot of headlines. My choice is where we go next. Well, let's talk about the Southwest numbers before we really get into it, since we just took them. So American, fifth consecutive loss. Southwest turns a profit thanks to federal aid. We just talked about 17.3 million Americans on some type of pandemic assistance or assistance program through the government. Southwest, they're on their own assistance program. That's why they're turning a profit, thanks to that federal aid. American, fifth consecutive quarterly loss, not too surprising when you look at what's going on. American Airlines posted a $1.25 billion net loss. Let's see, getting into it. The revenue came in just over $4 billion. Yes, Southwest revenue fell to $2.05 billion, down more than 51%, slightly below the $2.07 billion the market was looking for. Nonetheless, these airlines, they're waiting domestically. Not to say they're all set, but hopefully we're coming out of this COVID pandemic strong. We got JetBlue basically at pre-pandemic levels, right? You back this up on a 3-year weekly, and we're sitting right where we were coming into COVID for JetBlue. Similar territory for Southwest, actually above those price levels as we look for some demand in the coming quarters and years probably coming out of this. And for some context, in Delta, just under that level from 60, we're sitting at 45. So you're talking about quite a discount from where we were prior to COVID. Delta's one of the strongest ones out there, too. Check out American. American, you were at 30. You're still trading at 21, so a far cry from there. United, really off it from about 90, sitting at 51.86 right now. We're going to open slightly higher for United at 52.47. Jump into the Archegos stocks, quite an acceleration. Maybe that was the low yesterday. We saw on some of these stocks that have been pummeled. Discovery was up about 7%, I think. Look at that bar. That might be it, folks. It was quite a slide. Even after the first sell-off, what started happening, right? We saw that Credit Suisse was in more trouble than anybody realized. We're going to talk about this a little bit later in the program in terms of their risk process, just a complete abysmal failure across the board. Wall Street Journal with a pretty interesting article out there yesterday, basically saying they had no way to calculate their margin risk for positions on a dynamic basis. That seems like running a brokerage 101, as in you take a certain amount of equity, that person or entity has a position, and you monitor that position intraday for the margin risk. They just weren't doing it. Crazy action, but it might all be out. Hopefully, that's what the market was saying yesterday. You had Discovery up dramatically. You had Viacom. Look at that acceleration, up dramatically as well. The first real bid on that slide. Stay tuned, folks. We're going to be coming back, talking to our man Kevin Hinks, talking options. We'll be right back, folks.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I'll personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We have the S&Ps climbing into the green. We're positive by half a point right now, folks. 41.65 in the S&Ps. We got 12 minutes to go until the opening bell. Let's jump over to our man Kevin Hinks, folks. Every trading day, 11 a.m. Eastern time, right here on Tiger TV. Fast Market by the TD Ameritrade Network. Kevin Hinks, Alex Coffey, and the team breaking down the market action. It's earnings season. We got a lot going on. They got a lot to talk about, setting out hypothetical trades. If you haven't been over to the Thinkorswim platform yet, folks, head on over to the TFNN page, click on the banner, open up a demo account. You can follow everything they do, get completely acclimated to the options environment and that beautiful Thinkorswim platform as we're into earnings season. And next week, we really go crazy with all those tech stocks. Kevin Hinks, good morning.
Good morning, Tommy. Yeah, kind of a quiet start to the day. We're digesting some news out of the airlines that looks pretty positive so far. American Airlines higher, Southwest Airlines higher. So, you know, a very volatile part of the U.S. economy came in with pretty stable earnings. So I think the jobless claims data that we got this morning was surprisingly strong, the best post-COVID number so far. So, you know, the economic data is fairly strong this morning. I think this market is starting off a little hesitant, but we're kind of drifting into the green here as we approach 8:30 Chicago time.
Yeah, I mean, pretty interesting, the rebound we had yesterday, right, Kevin? I was talking with you about the VIX, and it didn't take long to get it right back down to about 17, man, on the open yesterday. We were flirting with 19, and yeah, the airlines, I mean, really remarkable across the board how a lot of these corporations have managed just these times. I mean, airlines, I think I saw Southwest turning a profit, having to do with federal aid, but remarkable kind of how they're managing them, and then the jobless claims number. Pretty interesting as we still have some pretty substantial cases across the U.S. in many states. And yeah, I mean, strong numbers as in the lowest number we've seen since we came out of the pandemic. And it seems to be continuing, which I like to see. lower than the analyst estimate again, as they were looking for maybe 600,000. We're at 550,000. Some strong numbers out of Texas, New York, Florida, some big states out there as well. So it's earnings season, Kevin. I know we got a couple today. We really are going to go wild next week, as I referenced, with all those big tech stocks. But what are you guys going to be talking about on the program today, coming up at 11?
Yeah, today, Tom White and Joe Mazzola will be joining the show with me, Alex Coffey, taking some well-deserved time off. We'll be trading Intel that has earnings today after the bell. We'll be trading Snap that has earnings after the bell, and then we'll be trading American Express, which has earnings tomorrow morning before the open. So 3 earnings plays that you need to have on by the end of the day today. We'll be talking all of them today on Fast Market.
You got to love it, man. I thought that's what you were going to say, Kevin. I didn't want to lead into you, but folks, every day they're talking about the stocks that are literally coming out, whether it's the night of, the morning following. That way you can really see how these stocks move and the volatility and the premiums. I was checking out both those stocks, Kevin, in the 3 minutes leading into this interview. So Intel, they're looking for a one-day move of about $3, so maybe just shy of 5%. But Snapchat, man, we got some volatility, a $58 stock right now, and options pricing in a $7 move on that event. Kevin, I was hoping you could just take a second. We've covered it before, but we always got new people finding TFNN and our live programming. For those that aren't familiar on the Thinkorswim platform, the one-day market maker expected move, could you tell the listeners and the viewers what that kind of talks about in Thinkorswim and when that appears and what it kind of speaks to and how important it is when you're talking about options around a company with earnings?
Yeah, it's always good to go over that at the beginning of earnings season. And on the Thinkorswim platform, they have a number that pops up on the screen in yellow right in the middle of the third line from the top. Right in the middle, it pops up. You can't call it up. It emerges. It creates itself when the front expiration's implied volatility rises above the next expiration. So, like, say in Intel, tomorrow's expiration, the April 23rd, that volatility is currently trading 85, showing the event that's about to take place with earnings. Well, April 30th is implied volatility is about a 51. So that difference between the two triggers that market maker move and showing a one-day event in Intel. Right now, that one-day event that's on the that's on the Thinkorswim platform is about $2.92. So, and that, like I said, you can't call it up. It just shows up whenever that front expiration volatility goes above the second expiration.
It's pretty cool, man. I learned so much from listening to you guys over at the TD Ameritrade Network, your program over the years in particular, man, and the Thinkorswim platform. Folks, I know they're a sponsor. We're biased, but go over there and check it out. Download a demo, especially as we come into earnings, because you got to understand the volatility that is priced into these equities. And man, you could be looking for quite a Snapchat move on earnings, but you better get quite a move when right now you're talking about a $7 move, and you can see $7 priced into the move, and this week is only $7 and maybe 35 cents. So all that volatility for tonight's action on Snapchat, Intel, pretty similar story as we'll look forward to those earnings. Well, Kevin, man, we look forward to the program. Snapchat, Intel, and American Express, did you say? Are they out with their numbers tomorrow morning?
Yes, tomorrow morning before the open.
Perfect, man. As always, we look forward to the conversation, Kevin. We look forward to the education, and thank you so much for the update.
Thanks for having me on, Tommy. Have a great day.
My pleasure, man. You too. Folks, every trading day, 11 a.m. Eastern time, this is the time to check out that program as they break down these hypothetical option trades coming into earnings. And next week, I cannot wait myself as we get basically every big tech stock in the market reporting between Tuesday and Thursday of next week. And as I encourage you, the Thinkorswim platform, folks, I've tried out many other platforms. If you are trading options in any capacity, I encourage you to check it out. Great platform for equities as well, but man, they do such a great job, whether it's your risk profile, probability analysis, the fundamentals of the company, and all of that implied volatility that is so important when you're looking at the options market and how they are priced accordingly. All right, we got the S&Ps up by about half a point. catching a little bit of a bid as we come into this market open. We get the NASDAQ 100 now negative by just 10 points at 13,908. Interesting when you look where we're sitting, right? You're talking about sitting right at the previous highs from February 16th, that high, 13,900. We climbed above that level last week. We're kind of sitting right at that level right now, 13,907 in the NASDAQ 100. And we get the Dow maybe climbing to positive territory, negative by just 2 points right now. Okay, what else we got going on? Jump around to some of the stocks making moves this morning. We talked about American. Equifax, they're positive this morning. How about them pushing 59% increase in revenue from its workforce solutions business. Equifax, EFX is their symbol. We closed at 192, and we're going to open at 215, folks. Check out this chart. You put it on a 3-year weekly, we're going to blow past all of that. I think that's an all-time high. It sure is. Equifax, quite the pop. From 192, we're sitting at 211 this morning on their numbers last night. AT&T out with their numbers, 86 cents a share, 8 cents above, revenue above as well. They added more wireless customers during the quarter than analysts had anticipated. You got the stock up maybe 1%. They were talking about AT&T. Quite a pop from 30 to 31.30. Now, the other one to think about with AT&T, I've talked about it before. So check out where we're going to open. We're going to open basically just above the highs we had of April 7th. You back it up to where we were in December, you're talking about 31.89. AT&T has a lot going on when you talk about their wireless service subscribers. But, man, Time Warner, HBO, they got a good thing going on there, and that's going to be contributing to that stock in the long run. Strong dividend stock as well in AT&T. They're going to open higher by the tune of about $1.30. That's up a lot more than 1% right now. You're talking about 3 to 4% pop in a strong dividend stock like AT&T. Stay tuned, folks. We'll be right back for the opening bell.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar's worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open slightly in the red. We got the Russell positive by 7 points, 6 points right now, trading at 22.44. The S&P is barely negative by 2 points, 41.61. NASDAQ negative by 23, and the Dow negative by 54 right now. Okay, we're going to jump over to the Archegos stocks and Credit Suisse for a moment. Viacom continuing to accelerate higher. That might be the low. Maybe the market thinking that the max pain is over there. Credit Suisse, they were talking about, I think, an additional $500, $600 million in this quarter. That's in addition to the 4.6 that they already wrote off last quarter. Viacom up 3.7% right now. You got Discovery. I'm assuming they're going to be higher by about 1%. Quite the acceleration yesterday from about $35. Credit Suisse. Look at that drop from 1040 to 960, talking about their numbers. They're down an additional 5%. You put this thing on a daily, the pain just keeps going, folks. And I would have zero confidence in this company in its entirety when you look at the action. So Wall Street Journal, out with an article yesterday, speaks to Credit Suisse exposure to Archegos Investments grew to more than $20 billion. Part of the investment bank hadn't fully implemented systems to keep pace with Archegos' fast growth. I mean, you have to think of what they talk about in here. It's just a complete abysmal failure. Okay, so first of all, a couple of points to go over here. You had the CEO and the chief risk officer basically completely unaware of Bill Huang and the monumental tens of billions of dollars of risk that this bank was withstanding as he was in there. So inside the bank, top management now knows that the so-called notional exposure, or the underlying value of the assets managed on behalf of Archegos, to more than $20 billion. The bank, were familiar, had thought it was a fraction of that, so they're completely unaware. They failed to protect themselves. Now, you get into there, they talk about, let me just pull up here. I want to get exactly when. So you have the exposure reveals for the first time the scope of the relationship. So they reported a $4.7 billion loss. That's been updated because of their earnings, talking about that they're going to have an additional loss this quarter. But I think now that the market's hoping it's all out of the bag. You have Miss Warner, its investment bank head, and other staff are leaving, okay? And you talk about the chief risk officer, Laura Warner, had no idea. And I'm trying to get the exact quote in here. Because the CEO and the chief risk officer basically didn't know. Now, the real one, okay, here we go. This talks about the risk and the just complete lack of institutional protection they had. Credit Suisse failed to protect itself from its Archegos exposure, in part because it had not yet instituted a system that monitored in real time how much risk a position created for the bank as the prices of the underlying securities changed. I mean, did you process what I just read there? They didn't have a system that monitored risk in real time. They had a client that they had $20 billion of exposure to, and they didn't have a system. Now, this system, known as dynamic margining, I mean, it makes sense, folks. I mean, and I know there are different systems when you're dealing with a customer that's using swaps. You're dealing with a family office that has tens of billions of dollars. It's not the same as a Thinkorswim brokerage where you deposit 10 grand or 100 grand and you're trading equities. But to a layman, to somebody not even the market, you would say, how are you not keeping track of the price of a mark to market of an equity as opposed to the equity that trader or entity has, and being able to manage your exposure? They just weren't doing it. Archegos made a large portion of their investments through a derivative called total return swaps. All right, that allows banks that allow users to take on the profits and losses of a portfolio of stocks in exchange for a fee. So they're kept on the bank's balance sheet, is kind of how to think about it, at least. And you're paying a fee for you having exposure to that. Archegos built up huge stakes in Viacom and Discovery. Because the stock prices of many of those investments were changing rapidly, Credit Suisse could not fully monitor the bank's risk. I mean, it blows your mind, folks. It makes sense, though. When we started seeing, right, that they were selling their position, billions of dollars, like weeks after other banks, What is going on there? How didn't any smart man or woman in that office literally sit down and say, what is going on? We got accounts out here that we can't even track the risk of with tens of billions of dollars, let alone the chief risk officer not even being aware of this customer until the days before the collapse, basically. The bank had not fully implemented systems to keep pace with the full growth. They liquidated the positions, but many times far past the others. And I'm trying to find the exact... Yeah, I wanted to find the exact quote that the chief risk officer didn't even know that this client existed. Nonetheless, folks, if you're in the market and you understand that they were not tracking the dynamic risk of a portfolio like that, it's astounding in the year 2021 that you don't have the technology to track something like that. And I would be nowhere near Credit Suisse at all, because that just makes zero sense. And I'm sure there's a bunch of brilliant people in that company, but I don't know what the environment is like in order to foster complete ignorance to risk for tens of billions of dollars. Because we all know how margin works, right? We all know how your equity in a position works when you use margin, right? You put up 50%, you're responsible for the risk. As it declines, we're all familiar with the risk of a margin call at least, and Credit Suisse wasn't even monitoring it on a daily basis. In what world are you not monitoring risk on a daily basis in stocks that rise from 25 to 78 over the period of a few months and then decline to the tune of 70 to 60 to 50 to 40 to 35. It just makes no sense at all. And Credit Suisse, I mean, I don't even know if they should be an entity at that point, if they're just playing games with people's money and not even keeping track of the risk that they're putting to their investors and so forth. All right, back to the markets. A little bit of negative action. We get the S&P trading down 8 points right now at 41.57. The Dow off 111. Keeping things in context, folks, this S&P, we're just bumping right up against this upper boundary line to the upside. 41.57 in the S&Ps. NASDAQ 100 sitting right at these highs that we had previously. Interesting price level, 13,900. It would make sense. You see a little bit of maybe potential resistance before accelerating above this point. Maybe the market bumping up a little bit as we come into earnings next week. And we'll talk about some of those earnings when we get back from the break, folks. We got Amazon. I think we got Microsoft, Google, Facebook, all the biggest tech stocks out there. When you think about really interesting coming into an event like that, when we're sitting at all-time highs, basically right to the tick. 13,899, previous high, 13,900, just got above that level to 14,059. We'll jump over to the VIX, volatility index, a little bit of an acceleration, and a bid on the open as we pull back about 8 points in the S&P so far this morning. Checking out the two stocks that will be coming out with their earnings tomorrow. We got Snapchat catching a little bit of a bid this morning. Always interesting to see how some of these stocks react the day of their earnings. Are people piling in to get ahead of that number? Are they selling to get out before that number? Snapchat up by 0.6% right now. Intel shares, a little volatility. They're flat this morning coming in. American Express, their numbers tomorrow. American Express right now, a little negative, down about 0.5%. AT&T holding their gains, up 3.8%. The airlines, we'll talk a little bit about them as well, seeing booking increases. Southwest up 1.1%, and American right now, a little decline, down 0.8. Stay tuned, folks. Be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. The last part of this Credit Suisse article I did want to comment on. I couldn't quite find it because there was just so much going on in here. That they did state that the CEO, Chief Executive Thomas Gottstein, he's been out there a lot, pretty new in that role, and Chief Risk Officer Laura Warner, who is gone already, only became aware, and here's the quote, only became aware of the bank's exposure in the days leading up to the forced liquidation of the fund. So you have the CEO and the chief risk officer completely unaware that you have a client with potentially tens of billions of dollars of risk on the balance sheet that you're not monitoring the risk of a dynamic basis. You got $20 billion of risk on your balance sheet, and the company is only worth $24 right now. Now, we've pulled back from those prior days. But, folks, all right, you're talking about Credit Suisse. Has basically enough balance sheet risk to wipe out their entire market capitalization, and the CEO and the chief risk officer are completely unaware that, number one, that client exists, and they're not doing anything to fix the fact that they're not dynamically monitoring the risk of their clients for a margin basis. Doesn't make sense at all. So stay away from that company in its entirety unless they basically replace every single person at the company. Because, I mean, just chatting with friends, folks, it's saying, how does that even exist? How does that even exist? How does a company like that even just do business without figuring out the risk of their clients on a dynamic basis as the market moves intraday? All right, speaking of market moves intraday, a little bit of a sell-off on the opening bell. We go from 41.65, we're down to 41.52 right now in the S&Ps. Tech stocks slightly giving it back, 13,875. The Dow, a little bit of a slide, 13,890. Let's jump over to what we were talking about with the airlines. So American and Southwest report stronger bookings and ramp-up schedules. So American said it plans to fly 20 to 25% less in the second quarter compared to the second quarter of 2019. You're going to see a lot of comps to 2019, folks, because 2020, comparing to 2020, there's no year like 2020, hopefully ever again in our lives. But they're looking for still a 20 to 25% decrease versus 2019. Southwest said it's going to fly slightly less than this June than it did in 2019 and 15% less. So Southwest, more domestically focused. You're looking at 15% decrease still. But, man, you talk about where we are. Second quarter, domestically, we still have a ways to go. I think, what are we at? 50,000, 60,000 cases still in the U.S. a day on a 7-day average. But domestically, people who want the vaccine, we're getting to the point that basically they've reached that level. So domestically, you're seeing kind of right back to where we were, but we still got 15% to make up. And that's just get back to 2019 levels. I mean, in theory, if you're going to be growing it 3% a year, 5% a year in 2020, then you're going to do it again in 2021. You got 2 years there. We shouldn't be just back to those levels. We should be above 2019 levels by a solid maybe 5, 10% or something like that. But strong numbers when you think about where we still are in the midst of quite a pandemic. Now, speaking of a pandemic, India, man, these are some strong numbers. Now, number one, India's got, I think it's 1.3 or 1.4 billion people. All right, so that's almost 4 times the size of the United States, to put things in context. Now, they got 314,000 new infections. The case could be made that probably testing is not to the degree that you would need at a time when you have hundreds of thousands of cases. The real number probably much higher than that, but that's the biggest single day total, 314,000. Now, again, keep it in context. India's got maybe 1.4 billion people. If you put that per capita to the U.S., that would be under 100,000. Our biggest total was like 200-something thousand, which is what we just climbed above. Maybe it was 300,000 one day that the U.S. had. Let's see, the previous highest single day in cases, what were we at? Yeah, just above 300,000 in the U.S., 313,000 following the holiday season. It's been quite a decline since then, but you look at it, we've got quite a little rise there as you go from about 53,000, pushing maybe 67, 69,000. We've dipped a bit, and hopefully that trend continues. But strong numbers from India in a big way. Hopefully they get that under control. You're talking about thousands of deaths a day in a country with 1.4 billion people, and many, many people living in poverty in there. So far, India reporting more than almost 3.8 million new cases, over 22,000 deaths. But look at that bar, not what you want to see. We're all familiar with the parabolic nature of this. India, they're in some tough shape right now. Hopefully they get that thing under control in a big way. All right, jumping to Apple. So Apple, they come out with a bunch of new devices, not a bunch of new devices, but they upgrade some things. I know I heard some friends talking about, I think it was the MacBook Pro. They're going to get an M1 chip, kind of an upgrade there. Also have the AirTag. So what's interesting here is we're all familiar, and I was looking at it. If you've heard, so there's the Tile, which you have on your keys. Happen to have mine right here, which is pretty cool, where you can find your keys. You can find anything with a Wi-Fi network. You strap it on your keys, right? You got a Tile. Now, what Apple's doing is they have an AirTag. Now, good old Apple. How about, I think it's $30 they're selling these per pop. But the interesting part about these is they're not using Wi-Fi, because that would really crush the battery of all of these. So it's a long-awaited gadget called the AirTag, and this is just kind of to get your mind to think about how things are going to change as we get 5G and all that stuff. Apple announced a long-awaited AirTag. $29, why not, right? Apple, they're always paying a premium number for their products. So Apple competes with a number of products on the market, including Tile, as I mentioned, okay? But AirTag's most important differentiating feature, I didn't know this until I read this morning, is the technology inside the gadget. It's other people's iPhones that it's going to work off. So it does not have a GPS signal, which would rapidly drain its battery. You know what's interesting? I think my Tile is out of battery right now on my keys, which I need to replace. It does not work on GPS, which would drain the battery and raise privacy concerns. Instead, there's going to be some privacy concerns when I explain this anyway. Instead, when it's attached to a lost object, it sends out scrambled Bluetooth signals. So you're working off Bluetooth here. For those signals to reach the internet and inform the person who's looking for their device, they'll need to find an iPhone that's listening for them. So all they need to do is be within the reach of an iPhone. You don't need Wi-Fi. I mean, think about how that changes what you're talking about. And then what this article speaks to is that Apple's leveraging the power of having 1 billion iPhones. You can't do this if you don't have iPhones everywhere. But Apple literally coming to the conclusion that, hey, everything is within the reach of an iPhone almost. And they're probably right in a lot of occasions. Using Bluetooth and the hundreds of millions of iOS, iPads, Macs, devices around the world, a user can locate a missing device even if it can't connect to Wi-Fi or a cellular network. They explained any iOS, iPadOS, all of their operating systems with an offline finding enabled. So you have to have that selection enabled. Find My settings. I have mine enabled. I got an iPhone watch. I can find my phone from there. It's always has helpful when you lose a product, but really interesting when you look at how they're going to use basically the billion iPhones they have, and then you got iPads, you got iMacs, and the whole deal. The bottom line is AirTag's an example, as one person's putting it right here, of Apple leveraging its ecosystem to create a more compelling product than what is currently in the market. Tile can't do this. They just can't do it, period. They don't have tiles everywhere. Apple, it's kind of the first instance where you think about how they're going to be able to leverage the size they are as we come into 5G. Now, this is not speaking of 5G, right? You don't need cellular, but man, what is on the table when you talk about coming into an environment where everything is connected to the Internet of Things? And we're basically coming into that level right now, folks. All right, markets slightly in the red, 41.55 in the S&Ps. We're down 0.2%. NASDAQ down 43 points, Dow down 103. Stay tuned, folks. We'll be coming back right after the break to finish up the show.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got the markets right now, negative action. S&P's down about 10 points, 41.50 through 2. Jumping to commodities. We got crude with continuing volatility. Check out that slide of crude, right? Early this morning, I talked about 60.61. We make it up about $1. But man, since then, you trade from almost 61.90 to 61.20 in the gold contract right now. Pretty good strength in gold across the board. Yesterday, we almost make it up to 1,800. Now, that is your daily. Backing things up, you can see we might have a downtrend channel, but geez, we get up to the upper boundary We were talking about 1830 there in the gold contract, but you put things back on a 3-year weekly, and we're talking about an area of continued support at about 1700. We're trading at 1787 right now. We're coming into the bar, whether it's November 23rd, quite the acceleration to lower prices in gold. Almost made it to 1800. Those round numbers. We'll see how gold reacts today. Folks, if you haven't tried out my newsletter, great time to do it. Head on over to the front page of TFNN, Rocket Equities and Options. We had a nice SPY trade on Friday into Tuesday. We had a 417 to 415 debit put spread. If you're getting into options, folks, you don't have to take every recommendation or trade I'm going through. Sometimes I just walk through the methodology so you really get a glimpse of the type of option trades that we're doing, how we're assessing volatility premium. Are we the ones paying premium? Are we the ones absorbing premium? It goes both ways depending on your market bias. We'll see how the market goes, but we're in earnings season, and you got to love some earnings plays and options to find risk. That's what it's all about. That's probably why I'm so against Credit Suisse. They must be against defined risk with the way they're running that company. I can't help myself. But check it out, folks, on the front page of TFNN, Rocket Equities and Options. Gold Report, great time to try it out as well. And Steve Ruitt's Mastering Probability, along with all of our newsletters, folks. If you're new to TFNN, every newsletter we offer 30-day money-back guarantee. If you're not happy, not satisfied, simply give us a call. Let us know you'd like that guarantee. We'll refund that completely if you cancel within the first 30 days for subscription. All of the newsletters and services we offer at TFNN, 30-day money-back guarantee. Check it out. And man, we'll see where this market goes, folks. We got strong numbers across the board. We got the S&P. I mean, you see a negative print, but look at where we are on this daily basis, just pumping continually against the upper boundary line, and the NASDAQ 100 just above the previous all-time highs as we come into earnings bonanza next week for those tech stocks. Thanks so much for starting your day with me, folks. Stay tuned.